Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, November 29th through Friday, December 3rd, 2010. Well, here's the chart of last week and the previous Friday. Again, I want to give you a sense about what's going on here. Take a look at the volatility. Now, remember, last week was a 4-day trading week with Friday being a half day due to the Thanksgiving holiday. I hope each and every one of you had a fantastic Thanksgiving and a weekend break. Now, as we get into this, the first thing that I note when I look at this chart is the volatility. You came here last Friday down and up in one day. So see the drastic drop and the volatile move back up and recovering. Then take a look at Tuesday, the gap down, choppy gap down, sideways move. Wednesday, a reversal to the upside. And Friday, again, as Thursday was closed, to the downside, we closed down nicely. Now, what was the key here? I mean, overall, what's going on? Well, what's going on is a Federal Reserve battle with global instability. All right, you have the Federal Reserve using POMO, and remember, this is QE2. All right, $600 billion being put to work, basically divided up in the course of 7 months or so, 8 months. That's being used to prop the markets up. Remember, the Treasury goes in with POMO. They buy Treasuries from the banks. The banks take that money and put it to work in the markets. Now, that can work in a quiet market. But when you have global instability like the South and North Korean conflict right now, which, again, who knows if it's going to develop into something more, if it's just a lot of, chest pounding, or if is it going to turn into a bigger conflict. That's hurting the markets because everyone's running to the dollar. When that looks like it's going to erupt, people run to the dollar. All right, when Europe is in a mess like it is now with Ireland getting a bailout, and we have Spain and Portugal on the brink of bailouts, that's causing people to run to the dollar for security and safety. That, again, is causing the market to drop. The Federal Reserve cannot control the global instability issues here. And that's why the market is kind of having this volatile nature, because every day you have something going on, that's when you're having these issues. Now, Monday, we go back to Monday, which is right here. I'm going to zoom in so we just have last week. And again, you please note the volatility. Down, up, down, up, down. That's the type of volatility you're seeing. You're not really going anywhere. But again, one day you have some global instability, the next day you don't. The global instability day, the markets get hit hard. The next day you don't, POMO comes in and saves the day. So again, what the Federal Reserve is looking for is a quieter market with less global instability. It doesn't look like that's going to be the case. You're going to have choppy markets in the coming week. Not only that, but whenever you have this choppy type of movement here, folks, see this? Up, down, up, down, up, down. It's telling you that it's setting up, or in other words, consolidating in a sideways manner for another bigger move. Now, the question is this bigger move going to be up, or is it going to be down? Now, we had some news over the weekend. So far, it looks like retail sales were not that spectacular, up 0.3% for this period last year, which by no means is a great sales week. Is it good? Yeah, it's okay. But is it as good as the Wall Street had expected? I don't think so. So it seems to me like my call last week that the retailers may come into the week a little bit on the weaker side as institutions start taking profits and amateurs continue to kind of buy. Just a normal rotation of money here. It looks like that may be the case. You may be looking at a small top out on stocks like Tiffany, on Coach, on, even stocks like Amazon, although Cyber Monday, it'll be interesting to see if Amazon moves up. Amazon may move up on Monday. We'll have to watch this again in the coming week. But again, this is the way it's looking. It's looking more and more like the retail sector, which has had an unbelievable run. Take a look at the retailers, the RTH. All right, let's bring up that chart here. If we go to the daily chart, you can see the retailers have moved up here into a double top, even though the markets have not. The retailers have. So, again, you're seeing this happen, folks. And, again, stocks like Tiffany. Let me take a look at TIF. Look at that chart. Really an amazing move from about $40 all the way to $60. That's a 50% increase in the last 3 months. Take a look at Coach. Coach, again, from basically $35 to $56. A huge increase as well. I mean, these stocks continue to just go crazy. Ann Taylor. Take a look at Ann Taylor. All right, Ann Taylor, $15 is now hovering at 26. You're talking about 50 to 60 to 75% moves on a lot of these retailers, and I think that the retailers at this point are looking for a pullback. That's my angle on it right now. The more research I do, the more it's looking like some of these stocks are due for a pullback. Amazon, again, is toppy, but this is one of the key stocks. I mean, this is one of the favorites, and you can see, again, it's continued to move to new all-time highs. Friday, even, it was basically flat when the market was down. That shows relative strength. Cyber Monday is supposed to be the big shopping day online on Monday. So again, I don't necessarily know if this one's topping out yet. I do think it's close, but it may have a little bit more upside, maybe to 180, 185 area, and we'll keep a close eye on that. And again, if you want the exact entries and exits, you have to join the research center, folks. That's the bottom line. That's part of inthemoneystocks.com, and everything underneath the research center is included. So if you get the research center, you're getting everything listed underneath the research center, which is tons and tons of things: nightly videos, daily market reports, research on the hot charts and alerts, key alerts being put out, pro trader watch list, you name it, it's there. Hidden gems will be coming out again in about a week's time or so, and that's again have a fantastic track record. Last year alone, 129% return. This year, very good. One of the stocks that we did again just a few months ago, NTWK. This is where we highlighted it as a hidden gem. This is where it went, folks. I mean, look at the moves on this from basically 80 cents, 75 cents, all the way to $2.10, just to give you a sense of the hidden gems again. And again, this is actually looking somewhat interesting. If it pulls back a little bit more, I may even be interested in this one, but I'd like to see a little bit more of a pullback. It's had a good one already. All right, now let's get back to the charts, folks. What are the charts looking? This is the daily chart. I'm not going to spend much time on this because, again, premium members are really privy to the daily moves where we're expecting it to go. But what I will tell you is that this market, the choppiness in this market, is telling us that it's looking for another move. Now, this is going to be the key for next week. Next week, we have the infamous jobs data on Friday. Friday, we will get the unemployment report and the non-farm payrolls. That will be huge for this market. In addition, the global instability will continue to be first and foremost on the market's mind. Every time this market looks to be quiet, expect the Federal Reserve to prop it up. And I'm dead serious here. I know it sounds ridiculous. I know it sounds, to us like, well, what? I thought this was a real market. It's not a real market anymore. You have to learn how to trade. This is a unique market that if you don't know how to trade it, you will be at a losing side. You will be on the losing end. Learn how to trade it and you can make money. It's not a real market. It's not supply and demand anymore, folks. It's Federal Reserve money propping it up, being printed daily, all right, versus global instability. Now, they're fighting a battle, and you could see the battle last week. I mean, this is a battle, folks, a battle for which way this market's going, all right? Here on Monday, remember last Monday, we had the Ireland bailout news, and then people started to worry about, Spain and Portugal. Market initially sells off. Fed comes in later in the day on lighter volume, pushes it right back up. Tuesday, you get the Korean issue. Wednesday, it subsides, doesn't look so bad. Then Thursday into Friday, it starts to look bad again, and the North Korea starts threatening again, and the markets come back down. So whenever it's not a big deal, the Fed is pushing this thing up. So what this is telling us is what is going to happen next week with global instability. So over the weekend, China's looking like it's trying to get involved. It looks like they're trying to fix things, which is a positive for the markets. It also looks like there's not a major issue in Europe. So does that mean the markets can possibly float up on Monday a little? It's possible unless something happens, Sunday into Monday morning, which we again will watch. It's very possible that Spain and Portugal will be getting closer and closer to having some major issues here as well. So keep a close eye on that. Right, there's a lot of issues here, but the Federal Reserve is doing their best to prop it up, and it's kind of a scary situation for the Fed because they're using their promo money to basically stabilize the market based on global issues. If that's the case, the Fed originally thought when we do this 600 billion QE2, we're going to prop this market up, we're going to push it up. They're not able to because of the global instability, so they're using up their promo just to keep the markets flat, alone from pushing it up like they had hoped. And again, this could actually end up in the long term being a negative as once POMO's used up, whether they're not going to do QE3, well, that's up in the air. We'll find out. But they're going to have to, they're going to try to push this market up if the global instability continues. So again, keeping a close eye on it. We do have more key cycle dates coming up. Again, these are going to be key plays that you're going to position yourself in order to make money. Again, I told the research center to be ready for some key plays in the coming week. And on the swing trade side, pro trader watch list will be getting plays as well. So again, going into the early portion of this week, you're looking at the news. Watch the news. Believe it or not, this is important because of the global instability, not because of, who knows about a war here or a war there or a bailout here, but because of the effect on the dollar. When the dollar goes up, markets drop. Take a look at the dollar here. This is the UUP. Look at the dollar. It's been heading up. We know the markets have been very choppy to sideways to down. All right, dollar up is very tough. If the dollar can fall back, then the markets can get a little bit of a bid. All right, and one thing I will say, here's the daily chart of the dollar. For those in the research center, you guys know I gave you guys this trend line. Look at the high on Friday. Perfect little kiss of that level. And look at the reversal on the dollar. That could help the markets if the dollar starts pulling off of this key trend line right here, in which case you would look for the markets to get a small little bid and possibly float higher into Friday's action. And Friday, remember, is the non-farm payrolls report. That's going to be extremely important. So that's where we're sitting right now, folks. Again, I strongly encourage you to join the Research Center. Get ready. It's going to be a fun week. The volatility should continue because the global instability will continue. That means trading intraday in the intraday stock chat and also swing trade setups on a lot of these key plays. Have a great day. Remember, webinar coming up next Saturday. That will house a free week of the chat room. You get the webinar. Again, it's our methodology webinar. You get a free week to the chat room for signing up. Take care, folks. Talk to you soon.